This is the AI News Flash for May 11th, 6 a.m. UTC. First up, Broadcom is weighing a record private credit deal to extend its AI chip lead, Yahoo Finance reports. Funds would back custom AI accelerator capacity expansion, 3D XDPC silicon photonics R&D, and TSMC 2nm advanced packaging allocation as Broadcom challenges NVIDIA's dominance. This would be the largest private credit financing for AI infrastructure ever, aimed at scaling supply for key custom ASIC clients including Meta, Google, OpenAI, and Anthropic.
Against the backdrop of $725 billion in combined 2026 AI capex from the four hyperscalers, this deal marks a historic shift, with AI chip dominance battles now spilling beyond traditional balance sheet financing into full-scale private credit market deployment.
Next, Google parent Alphabet plans its first ever yen-denominated bond sale to fund AI growth. Bloomberg reports, part of a multi-currency strategy following euro and dollar issuances. The yen entry aims to diversify FX risk and tap Japanese institutional investor demand. With hyperscalers racing on $725 billion in 2026 AI capex, Alphabet now formally joins the big tech AI bond issuance wave alongside Amazon, Meta, and Oracle. As massive AI capex consumes free cash flow as a structural feature, the bond market is moving into full deployment phase, marking a turning point where institutional investor exposure to AI credit products surges rapidly. Third story. Swiss asset manager Pictet has plowed 30% of one fund's cash into AI stocks, betting on risk revival, Bloomberg reports. The strategic allocation marks a sharp pivot from previous caution, targeting a market rotation back into risk assets. European institutional investor AI exposure is accelerating, concentrating capital in NVIDIA, Broadcom, TSMC, AMD, and Micron among chips, Microsoft, Google, Meta, and Amazon among hyperscalers, and pure plays like CoreWeave. Against Michael Burry's AI bubble warnings and Norway's sovereign wealth fund caution, institutional positioning is polarizing, and Pictet's bold move is being watched as a potential sentiment turning point for the broader industry. Fourth, fiber optic giant Corning hit a record high stock price after signing major new AI data center clients, the Daily Upside report. Following its multi-year AI infrastructure partnership expansion with NVIDIA, fresh large contracts with additional AI hyperscaler customers reaffirmed Corning's dominant position in the AI optical interconnect market. As copper interconnects hit physical limits for GPU to GPU communication inside AI data centers, silicon photonics optical connection demand is exploding, and Corning is establishing itself as a core player in the optical revolution alongside Lumentum, Coherent, and Marvell. With NVIDIA's Feynman architecture adopting silicon photonics for the first time and the $725 billion hyperscaler capex increasingly flowing into the optical layer, Corning's record-setting share price marks a major reevaluation as a leading AI beneficiary stock. Final story. Researchers warn that AI chatbots may blur the line between reality and delusion, according to a new study published via Science Daily. The team showed empirical evidence that prolonged emotionally dependent chatbot use can distort users' reality perception and reinforce delusional thinking patterns. Psychophancy in LLM design, where models excessively agree with users, structurally validates and amplifies fragile users' delusions and conspiratorial thinking, with multiple ChatGPT psychosis cases already reported. As OpenAI rolls out sycophancy mitigations via system prompt updates, and Anthropic publishes internal mechanism analyses of emotional patterns in Claude Sonnet, 4.5 regulatory debate is accelerating at the intersection of AI safety and mental health. And that's all for this AI News Flash.